Welcome to the world of TrendPod AI. Today, we're doing a deep dive into, well, a really electric day in financial history, June 24th, 2025. This wasn't just any Tuesday, it was a day where global geopolitical events sent these massive, immediate ripples right through both traditional financial markets and the fast-evolving world of digital assets. Our mission today is basically to cut through all the noise. We want to pull out the most important nuggets of knowledge from the latest reports, helping you understand exactly how major breaking news can instantly reshape global economies and, well, dramatically shift investment landscapes.
Right. And to guide us through this whirlwind of a day, our sources are essentially the real-time tickers. We're looking at prominent financial news outlets from all over the globe. So we're talking direct observations of market movements, the trends that popped up pretty much everywhere. It's a really fascinating snapshot of just how quickly global capital can pivot when the unexpected happens.
Okay, let's unpack this then. The core event, the thing that really kicked off the market activity that day. It was some huge geopolitical news. On Monday, June 23rd, U.S. President Donald Trump made this, well, surprise declaration. Israel and Iran had agreed to a complete ceasefire. Now, this was immense. I mean, given the recent tensions, the strikes we'd seen.
Exactly. It wasn't just a political statement.
No, it immediately triggered this massive rethink of global risk.
And what's absolutely crucial here is how the market saw this sudden easing of tension. It was like a major headwind that had been pushing against global economies just vanished. Think about it. A conflict that seemed intractable, injecting uncertainty into everything suddenly.
Yeah.
Ceasefire. For global economies, especially the ones really sensitive to oil prices, this wasn't just good news. It was like hitting reset on costs.
Yeah, a total reset.
It shifted sentiment from caution right over to confidence almost instantly. You touched on something important there. Trump announced it, but the Iranian government hadn't actually put out an official statement yet.
Right, that's key.
Which kind of raises the question, doesn't it? How much of this rapid market movement is driven by hard facts versus just sentiment, the expectation of what might happen?
That is such a critical point. Makes you wonder, how much is trading on the rumor, even if confirmation is still pending? But the market's reaction, confirmed or not, was just undeniable. Let's look at the immediate impact. Traditional stock markets first. In India, for instance, the Sensex, that's their benchmark index, it jumped over 950 points, hit an intraday high of 82,852.
Wow, 950 points in early trading. That's significant for India.
Absolutely, a huge surge of confidence. And the Nifty 50, another key index, it reclaimed 25,250, touching 25,257. And it wasn't just the big guys, we saw broad buying, mid-caps, small caps, both jumping over 1%. Some reports even said investors got richer by 4 lakh crore rupees in the first 5 minutes.
It's a staggering wealth creation almost instantly.
Right.
And that positive reaction wasn't just India. It was global. European markets echoed it. The German DAX, the Euro Stoxx 50, both surged nearly 2% right at the opening bell. You could really feel the relief across continents. In the Middle East, too, Israel's Tel Aviv 125 climbed 1.4%. Dubai's main index surged, 3.1%?
Yeah, big jump in Dubai.
And eastward into Asia as well. Japan's Nikkei up over 1%. Korea's Kospi jumped 3%. It really was this collective sigh of relief, translating directly into buying across major global exchanges. Shows how interconnected everything is now, doesn't it?
Totally. And what the most immediate and maybe most impactful effects for the wider economy was oil. Crude oil prices, Brent crude, the international benchmark, it just crashed below $70 a barrel. It had been hovering around $80 stubbornly.
Yeah, that $80 mark felt steady for a while.
Exactly. So for big oil importers like India, this wasn't just good for market sentiment. It was a substantial boost for the whole national economy. Lower oil means lower costs for industry, cheaper fuel for people, maybe less inflation pressure. It's like a direct economic stimulus, really, delivered by geopolitics cooling off.
Precisely.
And this positive shift, it spurred an equally swift move out of those safe haven assets. Usually when things are uncertain, investors run to gold, the US dollar, perceive safety. But on June 24th, we saw the reverse. People dumped the safe havens for riskier equities. Gold prices on the MCX in India, for example, fell 3,000 points, down to 96,422 rupees in early trade.
A big drop.
Yeah. And the US dollar index also saw a noticeable decline. If you step back, this rapid reshuffling of capital isn't just about one day's trading. It signifies this widespread belief among investors that the immediate global risk landscape had, actually improved, prompting them to chase growth, not just safety. It fundamentally shifts the calculation for global portfolios.
So that's the traditional market side. Whew. But the story doesn't stop there. You might think digital assets march to their own beat, but here's where it gets really interesting. That geopolitical ripple. It extended super strongly into the crypto market. Following the ceasefire news, Bitcoin surged past $106,000. $106,000. Incredible.
Right. And Ethereum wasn't far behind, jumped around 7 to 9%, hitting $2,420. And it wasn't just the top two. Other big altcoins like XRP, Dogecoin, they saw significant rallies too. It's just so clear now, crypto isn't this isolated thing anymore. It reacts to global news, global sentiment, maybe even more volatility.
And what's truly fascinating here, I think, beyond the immediate price pops, is the deeper trend. This sort of increasing corporate and institutional adoption of digital assets. Our sources, like as of June 19, 2025, showed 29 public companies' market caps over $10 million had announced crypto reserves.
29 companies. Okay.
And among those, 20 went for Bitcoin, 4 picked Solana, 3 chose Ethereum. It's not random. It shows this clear strategic preference for the more established, more liquid digital assets. They're increasingly seen as, well, legitimate parts of corporate treasuries or investment plans. The space is maturing.
And there are real examples backing this up. Like Metaplanet significantly boosted its Bitcoin holdings, now totals 11,111 BTC. That's a serious commitment.
It really is.
And get this, Texas became the first U.S. state to create a publicly funded Bitcoin reserve, allocated $10 million for purchases. I mean, what does that signal when a state government, usually pretty conservative with money, puts public funds into Bitcoin? It's powerful, right?
Oh, absolutely. It's a massive signal. Legitimacy, long-term confidence, all of that. It's beyond just corporations. It suggests Bitcoin's being seen as maybe even a necessary part of a diversified public treasury now. And fitting alongside this is the regulatory picture, which is also evolving fast. That's critical for wider acceptance. President Trump is apparently set to sign the Genius Act. That's a stablecoin regulation bill.
Right, the Genius Act. Heard about that.
Yeah, aims to create a clear framework for digital assets pegged to fiat. That could unlock huge institutional money by reducing risk and, providing legal clarity. Meanwhile, over in Japan, their financial services agency is thinking about shifts too. Maybe classifying crypto as financial products. That could lower tax rates, maybe even lift the ban on Bitcoin ETFs there. These legal moves, they aren't just technical details. They're foundational for more institutional involvement and broader market confidence globally.
That is a massive shift. Really speaks to a growing embrace. And when you zoom out, all of this, it signals this fundamental rethink of traditional financial norms. We're seeing reports, a significant 70% of central bank reserve managers are hesitant now about the US dollar. Many plan to up their gold holdings.
Yeah, that's a big statement about the dollar's perceived stability.
But here's the kicker, where generations seem to split. A survey by DeVere Group found 73% of investors aged 24-45 prefer Bitcoin to gold for long-term investments. I mean, this isn't just demographics. It suggests a whole redefinition of safe haven and store of value for a new generation, doesn't it?
It really does.
Points to a future where maybe digital scarcity, not physical stuff, is the go-to hedge. What does that even mean for how we define value?
It's a profound realignment, isn't it? For decades, gold was king. The dollar offered liquidity. But now, central banks are diversifying from the dollar. Younger investors are choosing Bitcoin. We're watching this live experiment in what future value looks like. It means the very characteristics defining a safe or valuable asset are being challenged. Redefined, really. Is it physical scarcity, cryptographic scarcity, stability of a nation, or a decentralized network? These questions are shaping portfolios right now.
So what does this all mean for you listening in? Today's deep dive, I think, has really shown us how incredibly quickly global events can just reconfigure everything. Across traditional and digital markets, it paints a picture of a world where information travels instantly, and the impact isn't just headlines, it's trillions of dollars shifting.
Exactly. And it forces us to think about how these swift geopolitical shifts aren't just driving immediate market reactions, they're also speeding up this fundamental reevaluation of what we even consider a valuable asset.
Yeah.
From oil and gold to Bitcoin and stablecoins. What does this rapid evolution mean for your own investments, your financial understanding, how you see risk and opportunity in this, increasingly connected world?
Thank you.